Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your client's money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?
Hello, hi guys, welcome back to the Greedy Trader channel. Now for those of you who are new to the channel, here is where we talk about all things trading, market profile, you name it. Now one of the things that we're really big about on this channel is making everything about trading completely real, right? We don't color code anything, we don't talk bullshit, we don't talk about stuff that we don't know, we only talk about what we know works and what I know has worked for myself for more than 15 years in this business. I've been on the institutional side, I've been on the retail side like everyone else. I like to think that I developed my skill set in trading like anybody else would have. I might have been just a little bit more fortunate to have access to the institutional space, but in reality, to be honest, it wouldn't have really mattered in the long run. In any case, what we do here is make everything about trading real. Right, so what do I want to talk about today? Now, for those of you who followed me, you kind of know the theme of what I do here. I primarily focus on the teaching element of trading. I want to focus a lot more on getting people to understand what they need to do to succeed. There are a lot of people out there who are, just misdirecting people for the purpose of, I don't know, social media cred, social cred, whatever.
No more tricks. No more lies. Only truth.
This is a faceless channel, as I've always said. It's not, for me, it's not about the social cred. It's about helping new traders who don't quite know where to turn, people who might have been struggling with ideas that you can move forward on, that you can build on. Anyway, I'm not going to talk too much about the video. I'm not going to talk too much about this whole stuff. I'm not going to give you a pep talk. This video, I'm going to focus on some really practical steps that you can take now. And I guarantee you, if you follow what I'm saying and you take these steps, and you can test that yourself, go back, have a look and test out what I've been saying. If you can take these steps, it will completely transform your trading within a week, probably less. With a bit of practice, you will actually see that there's more here to discover, and then you can start to push your learning down the direction that you need it to go. Now, I don't care if you've been trading for 5 years, 6 years, 7 years, 4 years, 3 years, 2 years. I know for a fact, having worked with so many traders, that a lot of things I'm about to tell you, people don't know. Right, so I have a philosophy, and that when it comes to trading, I have a specific philosophy, and for me, it's what I call my trading trifecta. Now, I focus on a couple of things. I focus on liquidity, I focus on volume, and I focus on time. Now, I've had other videos where I've explained this in detail, how I do it and how I bring it into the chart. So I'm not going to jump into that today. If you haven't seen that video, then go through my list of videos. I've got a ton of videos that cover this in depth, right? I do a lot of stuff around market profile, which comes into my liquidity, into the liquidity part of my trifecta. And that's because market profile shows you offers and bids, and it gives you a lot of statistical benchmarks. So that definitely goes on the liquidity side. Again, if you don't know anything about market profile, it's perfectly fine. I've got a ton of videos on this channel covering market profile, so you can learn a lot about it there. Today, I want to add something to the trifecta that I've never really done on my YouTube channels before. And that's because, I don't know, it just hasn't occurred to me that this is a very important aspect that everyone should know. But as I talk to traders and as I get questions for traders on my Discord server. By the way, I've got a free Discord server, right? So this is not an upsell for my Discord, but if you're interested in seeing how I trade and the things that I do around trading, then check out the Discord. In any case, in the Discord server, I get a lot of DMs, I get a lot of questions, people asking me different things. And a recurring theme is that people just don't know how the mechanics of the market itself works. So I figured that I'm going to add this to my trading trifecta approach. It's an add-on, and it fits into what I would describe as my liquidity side of the trifecta, but we're going to talk about that. And hopefully this will start to genuinely transform the way you think about the market, because I know for a lot of people it's difficult even to swap or change what they're doing because they've got this evangelical belief in what they're doing and saying. It's like a total blind faith in the direction they're going, and I don't think that's healthy. In trading specifically, it's not healthy. You can't have blind faith. You need to be, what's the word, you need to be teachable. But people in trading have such big egos. Like, everyone thinks they know how to trade it because it's just so marketed and it's so accessible, so everyone thinks I know how to do it, and there's these big egos that come in and you're like, well, I can see you're doing it wrong.
It's amazing. You are 100% wrong.
Yeah, but I know this guy who does this, and there's so many people who have scams out there who run B-book closed houses that they own, that they can make all their trades come out good. They're people who are incentivized by, you know, people on the sell side of the business to mislead and misdirect people. So it's really weird that in an environment like this, people have like a huge level of blind faith. For me, I find the whole thing is just perplexing. But in any case, never mind. I'm not going to moan about it. It's just life. You're going to see this, and it's just how it is. Anyway, onto the video, what I'm going to cover. So one of the important aspects about understanding how the market works in terms of mechanics is that people do get liquidated, right? And when people get liquidated is when the opportunities happen, right? So if you're trading a market, you're looking for a scenario where a lot of people are just completely offside and liquidated. Now, a lot of people will say to me that, oh, well, what does that look like? You know, how do I know when someone is being liquidated? Right, so this is a very interesting part of the trading trifecta, which is all about the liquidity makeup of the market you're trading. So I'm going to go a few days back. This is a 1 hourly chart of cable. So I'm going to take a step back in time. I'm not going to go too far back in time because that would just be ridiculous. So I'm going to stay with the 22nd of March 2024, right? So this was effectively a Friday, right? And what you would see, and I focus primarily on the London session, right? So the London Open tells me a lot. And this is part of my trading trifecta, is time, right? So when does the market open? When are the most traders active? And that tends to be in the London session, the New York Open, the NASDAQ Open, the Chicago Open, and then we kind of don't have any more liquidity. Now, if we go to the 22nd of March, we will see that there was a lot of trading, there was a lot of liquidity. So if we zoom in, we can see that there was quite a bit of volume at 1 a.m. for some reason in Asia. This is quite unusual, and we had a very big flow, right? So the order flow was heavily bid side, and it was a huge flow. So for me, waking up in the London session, which was about 8 a.m., the market had completely tanked, right? So the first thing I want to do is I'm going to grab a Fibonacci tool. My Fibonacci tool is not going to look the way some of your Fibonacci tools look like, because for me, it's more for measurement. So this will help me explain the concept I'm about to explain to you. So first and foremost, let's put the Fibonacci tool against this 1 hour bar. Now the question is, why did I do this? Well, I know that the best trader, or the luckiest trader, is short at the high of this bar, which is 26.75. Lucky guy. And I know that this bar closed or posted a low of 26.50, or close enough. Yeah, 26.50, right? So I know the best trader is short here, and the worst trader is long here, right? So we can deduce that. So what we really want to focus on is the trader who is long, right? So we can see that as far as this day goes, the best trader will be short at the highs, the worst trader will be long at the lows, right? So 4 a.m. has happened. Now think very carefully about the trader who is long at the lows. He's the worst trader, right? Remember, they're traders who are going to be long up here, right? But again, we have to assume that this trader bought the worst trader rather bought the absolute high, right? And the best trader sold the absolute high, right? So we're looking at, okay, so the second worst trader, I should have rephrased this, the second worst trader would have probably bought the low, expected a move to the upside, but now is offside, right? So we got the worst trader we got the second worst trader, we got the best trader, and then the second best trader who is short at the lows and happens to be right. Okay, that's short in the hole. I wouldn't advise anybody to do that, but if you're short at the lows of this particular range, right, where there was a lot of volume, right, which is part of my trifecta, there was a lot of volume. If you're short at the range, then you're the second best trader on the street, because obviously the market is going in your direction. So we got an idea of how the board is positioned, right? And bear in mind, I've called this first and second best trader to help you understand the concept. Maybe in technical terms, they're not the first and second best worst trader, whatever, right? So we're breaking lower. Now think very carefully about what the positions are of each trader. So the guy who is short is making, let's say, 1K at 26.50, and he's making 2K at 26.26, right? And let's say he's making 3K at 26.02, and he's making 4K at 25.77. Okay, pretty good. Now on the opposite side of that trade, the worst trader was long at 27.74 at 26.50. And remember, this is an example, guys. Ignore the numbers, just think about what I'm trying to say in terms of monetary value, right? Because this will make sense to you soon. So don't message me back and say, actually calculate that. That's actually just 20 pips. You said 1K. It is figurative, right? So at 26.50, he's out for 1K. At 26.26, he's out for 2K. At 26.02, he's out for 3K. And at 25.77, sorry, he's out for 4K. Okay, now this is where it gets interesting. Now at some point, that trader who's out for 4K needs to get liquidated, right? They need to get taken out of their position. They can't stay indefinitely taking a loss, because someone has to pay the guy who is short, right? That 4K. So there has to be a liquidation. Now the guy with 4K who is short can choose to buy back their short, and they're going to execute a buy trade, and then someone is going to end up being short whilst they're going to be long to close out their position. So when we do that trade, most of the traders now who obviously on the long side, again, their positions will be liquidated to pay out the guy who's successful. So that's what technically a margin call is, right? So this is kind of where we are, right? So if we think about that, the only job we have as traders is to figure out where these liquidations are occurring, and that becomes a place of advantage for us. Now, how do we do that? We understand the concept that these traders were offside. By the time we got to the London Open, this market was heavily short. You know, a lot of people are offside. So your objective is to figure out, well, where's a good price to get long? So I use this Fibonacci tool to kind of trade off these levels, right? So I can see what's going on. So my next step would be, how do I know people are getting liquidated? It means that I need to see a lot of volume in a major session, which for me will be the London Open, right? So the London Open opened here, traded out, right? So it took out the lows of 7 a.m. So that indicates that we're going to post lower prices. So as we grind into the 350, I would start to consider a long, right? Now I want to make sure I am 1-2 deviations from that long. So my stops would be approximately here. And I would be expecting a reversal, right? Because I know these traders are getting liquidated. I will be expecting a reversal somewhere to the 150 or the 200 as a, sort of minimum, sort of pullback. That's what I'll be expecting, right? So I will be looking for this as a trading opportunity, right? Because I understand that traders are going to get liquidated. So I want to see evidence of that. I start to see some evidence at 7 a.m., but that's too early. And as we opened 8 a.m. and retested this level here, we can see that we started to trade a little bit lower, which means that the most interesting level for me becomes this level here. Now the market did creep a little bit lower, and that's absolutely fair, but then we can see very quickly we had this big pop-up and we introduced some demand into the playing field, and that was about 12 noon, and that's pre the US Open. So that's kind of where we wanted to be in terms of positioning, right? So that's one example. Right, let's do another one. Right, this is going to be the last one, and then we can sort of recap. So here we can see we established some demand. So obviously based on my volume trifecta, I want to make sure I map out this zone, because any buying should really come from this zone. And then we move into the next day, and then very early in Asia we show 1 a.m. huge amount of volume, so additional demand. So once again we can see that this was quite commanding, and then we turn up in London and we post volume again, and that volume is slightly lower than that of what we see in Asia. So that tells us that Asia is the commanding range that we need to look at. So again, taking the same theory, we would assume that the worst trader of the day happens to be short at the bottom of the market, right, which would have been 25.94, and the second best trader is long at the top and the best trader is long at the bottom, right? So this is the best price, right, from where all the volume is traded. And you can understand why I think about it this way, because if this is where all the volume is in Asia, and this is some kind of front run and it's a demand play, then we'll have to assume that the best trader bought at 25.94, right? And that's where all the support is going to be. So for me, I want to position now and say, well, where are these traders gonna, well, essentially the ones who are short, where they're most likely to be liquidated, and I want to be able to tally that up with volume. So as you can see, we push into the US Open, and we start to show virtually no volume from what we saw in London. So that tells us the US session is pretty weak, so we could expect higher prices. So again, we have to wait and assume that if we can get up to the 350, right, which is here, then this will become a good selling point. But we want to see volume in the prior session, and we get that at 9 a.m. in London, right? So initially in Asia here, we show some volume, and as I wake up in London, I can see that we're still trading higher, right? So there was some degree of supply here. These traders got stopped out, and then now we start to see a lot of liquidation at 9 a.m. right on that line. So now all I need to do is see this price tick closer to this level, and then that's why I want to establish a short position, right? So again, I'll establish a short because I'm getting the information that the trader who was short here is out for 1k, out for 2k, out for 3k, out for 4k, and then I see volume, right? That is technically a liquidation. Now all the other traders notice, and everyone has a short position, and that market tracks back. Well, am I looking for this to go? Based on the 2-day climb, I know that we're going to at least tap the 100, at least, right, before we're going to start to see the board change. And that's what's happened over the course of yesterday to today. So let's apply the same concept today. So we can tell quite easily that at 9 a.m. that was where all the strength was, right? We can see in Asia it was very weak. We saw some volume at 7, but really it was at 9 that we saw the extremity. So that's supply coming in, right? We can see that here, marked here off as supply. Now as we go lower, what I'm looking for is first to trade into the demand zone, and let's see how low we can go in a New York session or US session, and see if the traders, now again using the same concept, the worst trader is trading up here, so he is long and the market is short. So for now, he's down 1k, he'll be down 2k, down here he'll be down 3k, and then here 3.5k, here 4k. So as we grind into these levels, I'll be looking for a volume reaction. We're pre-US session at the moment, so we're very close, and I'll be looking for a volume reaction to tell me that traders are being liquidated, right? Now I get the feeling that we should see that very soon over the next hour or so. So that could mean that we might not even get today to the 300. But this is the stuff that we're looking out for before us to make a decision. So we are looking out for liquidation points. Now I hope you've enjoyed this video. I hope this has made sense. And if you guys can take your time to replay what's just taken place here on a future day and then reevaluate. But for now, we can clearly see the supplies on London's side. We're now grinding lower, and we need more confirmation into the Nasdaq Open, which should be in roughly an hour and a half, give or take. Right, but till my next video, guys, adios.
Hey, listen, I quit. Yeah, I'm going into stocks.
Name of the game. Move the money from your client's pocket into your pocket.
But if you can make your clients money at the same time, it's advantageous to everyone, correct?
No.
No one is paying attention.
It's unbelievable.
Have to act now.
God, this is intimate. I feel like I'm financially inside of you or something.
Okay.
I have 5 houses and a condo.
I'm considering going long on April wheat. What do you think, Valentine?